Good afternoon, and welcome to today's Making Sense of Finance Midweek Money Matters weekly event, where we are pleased to have you with us with Holly Zugay from the Pennsylvania Housing Finance Agency. We're doing these series of sessions in recognition of Military Appreciation Month, and we're so happy to have you here. If you've participated in our events in the past, we know that you recognize these are very different times, and so we're doing everything virtually, and we appreciate you being here. If this is the first time you've participated in Making Sense of Finance, welcome, and we hope that you'll find our sessions to be helpful. If you have questions about our upcoming sessions, you can always visit us at padobs.eventbrite.com, and I will put that in the chat box. We are recording today's session, so please remain muted throughout today's presentation, and if we have time at the end, we may be able to unmute you one at a time to answer those questions. In the meantime, please feel free to add your questions to the chat box, and we will answer them at the end of the session. Without further ado, I introduce to you Ms. Holly Zugay from Pennsylvania Housing and Finance, who's going to talk about getting your financial house in order.
Thank you, Katrina, and thank you for asking PHFA to be part of the Military Appreciation Month. We're so happy to be here. And for those of you on the call, welcome, and we thank you for your service. And hopefully you'll find the session useful in some capacity. We do have a lot of information to cover today, so I hope we get to everything. And again, if you have any questions we'll answer the questions at the end in the chat box. Okay, so let's get started. Getting your financial house in order. I'm always asked, what should we know about money? And the sky is the limit. So today we're going to try to put this in a kind of a compact recipe for what we should know about money in general. So we'll talk, am I goofing up the animation already? So we're going to talk about how we learn about money, the framework for building our financial house, so what we should know and do with money, and some additional resources to guide you and help you out in that capacity. So in the chat box, if you would put down what is the best $50 you've ever spent. Now, it doesn't have to be $50. It can be less than that, but what's the best money that you've ever spent? If you could be so kind as to share that. And just to get us started, I think my second marriage license is the best money that I ever spent. Trying to bring some levity to the situation. Anything? Okay, we're being shy today. Oh, that's okay. I understand it's the lunch hour, and again, thank you for being here. So the best $50 I ever spent, again, I think I said my second marriage license, but truly, several years ago, I was a housing counselor, and I saw this advertisement for, I see paying for my passport. Yeah, absolutely. That's a great money spent. But I was working as a housing counselor, and I saw an advertisement for a financial education conference, and I thought, oh my goodness, there can't be other people out here like me that love this kind of stuff. So I went to our executive director and I said, hey, I'd like to go to this. And she's like, sure, but we're not going to pay for it. So $75 later, I decided, well, I'm going to go. And 6 months out of that, I got a job. So I wasn't anticipating that, but that was a very happy surprise of spending $75. Now, what about, can you share the worst $50 you've ever spent? Maybe. Worst $50 you've ever spent. And it's okay to be a little shy about this because we know we don't like talking about money. Online video game. Oh, yeah. I have a pile in the basement from my son paying for coins. Ah, interesting. You see those commercials on TV. Yeah. So kind of along that line on TV, the worst $50 I ever spent was I bought these things called potato hands. They're these blue silicone gloves that have these little nubbies on the tips and at the time my son was very small and loved mashed potatoes, but like everything else, I hated hated to peel them. So I thought I'll get these gloves, and all you have to do is kind of swish the potato around, it peels the potatoes for you, but you have to use hot potatoes, and it just became a hot mess. So that was not a good $50 that I spent. Rollerblades, how about that? For the video game coins. Okay, I'm just looking at the chat box. So there are many, many different things that, we are good at spending money, and we're not so good at spending money. So why did we do this? It really shows that we are on a level playing field when it comes to money. We have the capacity to make those really good money choices, and we have the capacity to make not so good money choices. And we want to try to limit those not so good money choices. But even, it doesn't matter what you look like, what you know, how much money you have, we still make those mistakes. And part of the reason is, how do we learn about money? Do we get the money gene? No, that doesn't exist. Humans have made this up. Do we learn from our parents? Well, the reality is parents would rather talk to their children about sex and drugs versus money. Money is a very private thing, and parents are often afraid that the children are going to go and talk to your neighbors about how much money you make or how much debt you have, things like that. Do we learn about it in schools? Well, the most recent study, I believe, was 2017, 2018. There was a survey done of the Pennsylvania school districts, and there were only 15% of the 500 districts have a personal finance course as a requirement for graduation. So we're teaching our kids how to read and write, which is really important, but not what they need to know about every single day. So we're not teaching them about money. And how many of us learn by empty pockets? Well, I think we might all be a little bit guilty about that, but we don't have to do that anymore because you're here and we have financial education to help you through this process. So why do we have financial education? We want to build our financial capability, which is a buzzword of these days. Basically, it's having the financial knowledge and the skills which together help us build confidence to make those good money choices. So that's one of the real benefits of financial education, is resulting in those good money choices. So what do we need to know? Okay, so this is the framework for building your financial house. We're a housing agency, so we had to kind of work around the whole housing example, but there are really 7 blocks to our financial house. Investing in yourself, maximize earnings, spend sensibly, check taxes, make money work, protect your potential, and then borrow to grow. So we're going to look at each one of those topics in a little more detail. All right, so with each one of our topics, we want to have those money facts, those tools. What do we need to know about money? How does it work? And then we need to have the actions that we're taking. Remember, building our skills. So the construction, so we have tools for our financial house and we have the construction. What should we do with those tools to build our house? All right, so the first topic, invest in yourself. A well-built financial house starts with a strong foundation of investing in yourself, developing new skills, and recognizing opportunities. So what are the tools? What do we need to know about investing in ourselves? We want to identify our personal assets and opportunities to use them to advance, recognize that learning equals earning, and then identify how to create smart financial goals. So those are our tools. So what are personal assets? Well, personal assets are things that can't be taken away from us. So personal assets are our education, our skills and talents, our personality, our connections. So these are really the foundation of our financial house. These are the things upon which we use to build our financial future. And what's really important in this is it's all about securing that employment, using those personal assets to improve your financial, your employment position. So what we want to do is we want to tell to an employer how a personal asset can actually be something useful for an employer. Let me give you an example. So if one of my skills was planning family parties, so people come to me to plan the weddings and the anniversaries and things like that. Well, how does that relate to a job? Well, and this is actually a true story, where I had a job interview, and the director asked me, hey, have you ever planned a conference? And I had never planned a conference in my life. But I thought about, well, I planned a wedding, so that has, some of the same requirements, planning a wedding, planning a conference. You have to have, time management, you have to pay attention to details, You have to be, have those organizational skills to multitask and of course work well under pressure. There is a deadline. So you can see that, some of our talents can really be easily converted into job skills. So that's important when we're talking about our personal assets. How can we show an employer that they're transferable to this position? And then we talked about learning equals earning. So here's some interesting statistics from 2019. These are the median annual wages by education. This is a U.S. median, so it's might be different in your particular area. But as you can see, it's statistically proven. The more you learn, the more you earn. So any kind of learning that we can take advantage of, and it's not just that, the college degree or things like that. It's all these other things, these training opportunities at employers. Maybe it's learning something new on YouTube. Maybe it is participating in a hobby. These are all things that we can use to build our skills. And lastly, about investing in ourselves is setting those smart financial goals. They need to be specific, measurable, action-oriented, realistic, and timely. And most importantly, they need to be yours. It's great to have somebody say, well, you should do this or you should do that. But that becomes not your goal, but somebody else's goal. So we really want to filter down, funnel down to what's important to us personally and setting those goals. All right, so what is the construction? What are the actions that we want to take as resulting in investing ourselves? Create your checklist of personal assets and use them to improve your financial situation. Seek education and training, regardless of what type it is, and then go ahead and set those smart financial goals. Moving on to maximizing earnings. The walls represent earnings built up from the foundation and maximized by using all of the available resources, directing payroll deductions, and choosing the right employee benefits. So what are the tools that we're going to learn about? Identifying all sources of cash and non-cash income, recognizing the difference between gross and net pay. Who is FICA and why is he taking my money? Become familiar with employer-provided benefits, and then really look at all the factors in a job that affect a job's net economic benefit sort of before jumping ship. Okay, I'm seeing, is anyone having audio issues? I'm not seeing no responses in the chat box.
We're good, Holly.
Okay, thanks, thank you. I can get back to this. So sources of income, we have our earned income. So where does your earned income come from? A job, a side gig. We may have unearned income, interest, dividends, maybe a gain on the sale of property or gifts. And then other income, non-cash sources of income. And certainly being in the military, there are many non-cash sources of income, whether it's uniforms, food, housing, those things. So it's important to sort of separate and understand what the resources you have coming into your home. So question, did you know that there are absolutely no standard forms of pay statements in Pennsylvania and certainly in the country? Now in Pennsylvania, there are certain things that have to be reported. So it's important to be able to evaluate your own pay statement to understand the things that have to be reported. And if we had more time, I would go into all of those. But just know that if you go to the Pennsylvania Department of Labor and Industry, they do have a guideline of what employers must put on a pay statement. So more than a paycheck, right? Employee benefits. Why do organizations offer employee benefits? Well, it's because we want you to want to work here. That's why they do it. It's more than just that paycheck. So here are some types of employee benefits that are important to look for when seeking out employment or evaluating a new job. Health insurance, again, really important. Other insurances, which may be life insurance, maybe disability insurance, retirement benefits, paid time off. Woohoo, you get paid for not being there. And other benefits such as maybe employee assistance programs, which give you access to free family counseling or financial counseling, maybe legal assistance. You might have free coffee in your office. You may have free access to an exercise facility. These are all the other things that really make it worth checking into a different job. So before you jump ship, it's important to understand compare your gross compensation with both jobs, understand your pre-tax benefits, how that affects your income and payroll taxes to come up with your net pay. And then once you have your net pay, look at all the other things that aren't so obvious as a new job. The costs of working, what are your transportation, parking, coffee, meals, maybe extra childcare. And then look at other benefits too. Maybe there's a savings match on your retirement savings. Maybe there's tuition reimbursement for more education. Remember, learning is earning. Gym membership, or maybe childcare assistance. These are the things to consider when comparing one job to another. And again, before you jump ship, and there is no pun intended to that one. All right, so maximize earnings. What are the actions we should take? The construction with these tools. Review your pay statement regularly. Ask questions, compare options, and choose the right employee benefits for your situation. We didn't talk about this much, but IRS withholding form to make sure that you don't have too much withheld from your pay in federal taxes, and then evaluate the net economic benefit when choosing a job. So that's maximizing our earnings. Moving on to spend sensibly and mapping your money. So we want to spend sensibly to fill our homes with the things that we need in order to keep it in order, because overspending can result in both physical and financial chaos. Map your money to start on the journey to your financial growth and success. And then the tools: identify money values and spending habits, distinguish between needs and wants, identify the steps to create and use a money map, and recognize the role that transactional accounts play in managing cash. So we'll explain that a little bit further. Spending gets a bad rap, doesn't it? It's something that we have to do every day to get the things that we need, but it's really a matter of doing it sensibly. And our values really influence the way we spend. So a couple of different money values. And first of all, there's no right or wrong money value. They are what they are. It's based on our experience, based on our upbringing and things like that. So maybe your money value is indulgent. You use money to indulge yourself. I want it now. All of your wants are urgent needs. Maybe you're not worried about money. Everything will be just fine. Maybe use money to show prestige. That one television show, The Most Expensivest, comes to mind. And this is the whole prestige thing, I think, is really, it's influenced by the advertisers. What happens at the holidays, you see these, big fancy cars with the big red bows, and, you want to have that life, and it's going to make you happy and all these kinds of things. But we have to really keep our spending in control in order to reach our other financial goals when we're talking about our money values. And then security: maybe you're a penny pincher, maybe you reuse bath water to save a few pennies. And that's okay too. Money is security. And I think what we've seen with COVID-19 is having that extra reserve, or having that extra, cash savings is important in time to keep your financial security in place during times of crisis. And then maybe you don't see money as a value, or as anything but a tool to build your dreams. I like building big dreams. How does that sound? All right. So here's the word budget. 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 No matter whatever way that you write it down, it's still a budget. And the term budget is very restrictive. It feels like you can't spend. It's kind of like, being on a diet. You can't eat, but you want to be on a sensible eating plan or a sensible spending plan. That's terrific. But we take it one step further. We want to actually map our money. We want to be going someplace with our money. We want to be directing our money. And that's where the money map comes in. So what are the steps to creating a money map? And again, this is a basic budgeting process, but we don't like to use that word. And we're not going to go into detail, but just to give you an outline of the process. So first of all, understanding what your income is, all sources of income, understanding what your expenses are and categorizing them, tracking your expenses. Understanding what your cash flow is, which is simply your income less expenses. How are you doing at the end of every month? Based on that, we need to make some choices based on your financial goals as well. So make choices. Do you need to increase your income or decrease your expenses, or a combination of both? And then plan your route with every one of your expenses, every one of your income sources. Plan to see how we can make those numbers work. And then, of course, follow your map, because it's great to have all this information, but what if we're not doing anything with it? We're not taking that action. it's not going to help us. Get to Vegas, baby, or wherever your financial goal will take you. We're talking about understanding transactional accounts. We're talking about mainstream financial institutions. And the reason why we bring this up is because in Pennsylvania, there are 20 to 25% of residents are either unbanked, which means they don't use a mainstream financial institutions, or they have an account or two, but they're not maximizing the usage to be the most beneficial. So we want to encourage people to look into opening up a relationship with a bank or a thrift, which is they are insured by the Federal Deposit Insurance Corporation, or credit unions, which are insured by the National Credit Union Administration. And certainly the Department of Banking and Securities have more information on these businesses and on these nonprofit organizations. You can check to see if somebody is licensed in Pennsylvania, if they have any complaints against them as well. But the benefit of having these accounts really is the variety of products. So many different online banking, checking accounts, savings accounts, lending products. It's safe though. Nobody's going to steal your money. It's guaranteed $1 in is $1 out, and it's insured, again, up to $250,000 per account per registration per institution. How do I get that straight here? It is insured. So in case the financial institution runs into money trouble, you will have your deposits guaranteed. And then it's liquid, which means you can turn it into cash quickly. A fancy word, liquid. Liquid means cash quickly. So you can just, have an ATM, do online transfers, things like that. It's very, very liquid. It can be very low cost if you're using the products appropriately, and it's convenient, 24/7 online banking, and then it helps to establish a relationship. So if in the future, for example, if you have a goal of buying a home, it's great to have a relationship with a financial institution to help you through that process. All right, so what do we want to do with this information to spend sensibly and map our money? Live within your means, track and prioritize spending according to your values and your goals, create and use a manageable money map, and establish a relationship with a government-insured financial institution. All right, we're going to go on to taxes. Woohoo, everyone loves taxes. Wait, no one wants to pay more than their fair share, right? That's key. So checking a house's insulation can minimize hidden heat loss, but checking taxes can minimize dollars lost to overlooked deductions and credits. So what do we want the information to know about checking our taxes? We want to look at the value in keeping good records, look at the difference between total and taxable income, recognize the difference between total tax and withholding. Ooh, that's heavy there. And be aware of tax preparation methods and providers. So how is your record keeping? This hits a little too close to home, but people who know me know that I can find a piece of paper if necessary, even if it's at the bottom of the pile. But it's important to keep good records. What do we keep? We keep our vital records, birth certificates, marriage license, things like that, financial records, taxes, bank statements, legal records, whether they're bankruptcies, other financial records, as well as military records, property records, have you buy a house, you buy a car, what are those records behind that? And then personal records, basically who to contact if there is an issue or if you have a problem with your health or something else. So where do we keep them? We keep them on our person, meaning on our wallet or pocketbook. You might have a file cabinet at home. And certainly now with all of the online statements, I think the filing cabinet is kind of going to the wayside, but you may have a home safe and you may be using a safe deposit box at a financial institution. The key here is the more damage a lost record can cause, the more safe it should be. So example, your social security card, you need to keep that in a very safe place, whether it's your home safe or safe deposit box. If you are using a safe deposit box, make sure that somebody knows that you have that box in case something happens to you and they may need to access what's inside, especially if your will is inside and things like that. And then why do we keep good records? This is the number one all-inclusive. Everyone needs to keep good records. It doesn't matter what you look like, how much money you make, what your background is. We need to have these records. It provides proof of purchase, proof of ownership, helps us save money, and less stress if you know where exactly your records are. And don't forget to add a discard date. We don't need to keep everything forever. All right, what do you think of when you hear the word taxes? Ooh, a little scary, huh? Yep, scary, angry, frustrated, tired of empty pockets, or just simply give up. As I said before, no one wants to pay more than their fair share. But how do we actually go through and understand our taxes? So who is subject to taxes? And we're talking about, in our situation, federal income taxes, okay? So everyone is, even things that aren't people, such as estates and trust accounts, corporations, they're all subject to tax. What, again, is we're talking about our income coming in, our earnings that we have, regardless of their earned, unearned, things like that. And when are we taxed? We have to pay as we go, just like the toll booth, but be aware that if you don't pay enough during the year, there are penalties. Yay. So the 1040, doesn't this make you just jump and celebrate? You love the 1040? Okay, not really. But it's important to understand some key concepts of our tax return. And certainly now with the new tax deadline of May 17th, you may or may not have had your taxes done already or have done your taxes on your own. But even if you have had them done already, it's interesting to go back and review your own form with some of these concepts. So here's the process. First of all, you determine your filing status, which is simply your family status. And that is the basis for tax tiers and other deductions and credits. We want to look at what your total income is, see if you have any adjustments to income, which mean these are certain expenses that the government says, oh, if you make these expenses, you can take it off on your income. So you may have had an IRA contribution, you may have higher education expenses. And again, there are limitations based on filing status, based on income, things like that, to see if you qualify for these adjustments. And then deductions, which the government says, well, everyone's entitled to a standard deduction. But if you have certain expenses that equate to over that amount, that you can take that off of your income. All right, so once we do that, we have our total income, less our adjustments, less our deductions to get our taxable income. Taxable income divided by our total income, multiply times 100 gives us the percentage of our income that's actually subject to federal income tax. Do that calculation on your own. Taxable income divided by total income, multiply that times 100. You may be surprised how much of your income is actually subject to tax. Then beyond that, we want to look at credits, which are a dollar for dollar reduction in the tax that you owe. Compare that to the payments that you've made throughout the year and you get your net result. Pretty simple. We just make it sound so simple. So the net result is the final resolution between tax liability and payments that you've made during the year. So total tax minus total payments. If it's a negative number, that means more was paid than owed and a refund is due. Ooh. If it's a positive number, meaning less was paid than owed, a payment is due at the end of the year. So a refund. When we look at refunds, take a look at your net withholding. So how much you had withheld from your pay, divided by the pay periods. That is money that you could have back in your paycheck each year instead of waiting to file at the end. Now, if you owe money, if you have a payment due, divide that by the pay periods throughout the year, and that's the additional money that could be withheld from your paycheck instead of having to write that check at the end of the year. So again, net withholding is the withholding minus your total tax. I know we've talked about a lot of stuff with taxes and I'm just kind of smoothing over it, but take a look at your own return in those items. So tax preparers, you can have taxes done for free. The IRS has a free file site, depends on what your income is. There are volunteers, VITA sites, volunteer income tax assistance sites, and oh my gosh, TCE is the tax consulting for the elderly. I got that wrong, I know that. And then there are online fillable forms for everyone. And of course, there are the paid preparers. You have software programs that you can do yourself. You can work with a CPA or you can work with one of the chains. It's really, really up to you. But just know with the free sites, you may not have to pay to have your taxes prepared. All right, so what do we want to do with this tax information? We want to establish a manageable record keeping system. review possible overlooked deductions and credits, weigh the pros and cons of refunds and adjust your withholding if necessary, and select the appropriate pair to avoid unnecessary fees. We're moving right along. A lot of stuff to cover, like I said before. So making our money work. Much like adding an extra room in the attic of your home, you can expand your financial house by making your money work for you through saving, investing, and monitoring what you own. So the tools, we want to differentiate between working wealth, identify the power of compounding in time, distinguish between types of assets, their uses, costs, and risks, and recognize net worth as a measure of wealth. And to let you know, we've got a couple of other investing sessions in this series. So I encourage you to, for more detail on investing, go to either Investing 101 or Investing 201. Again, a part of this series. So working versus wealth. You work hard for your money, don't you? Thumbs up on that one. Absolutely. We work hard for our money. What happens when you stop working? Where does your cash come from? Well, then it comes from what we call wealth, or the things that we own. And we think of wealth in these terms, home, cars, collectibles and things like that. But really what we're talking about is building assets, assets that work hard for you, that will either pay you cash or you can sell for a profit in the future. So there is a difference between saving and investing. Saving is just setting cash aside, use it now or later, liquid, turn into cash. Safe earns very little interest, so saving. And I know that that topic is being addressed in the other in saving and investing sessions. So investing is using that cash to buy an asset for future income or gain and use it in the future. It's less liquid, harder to turn into cash. There may be some risks. There's no guarantee that $1 in is $1 out. And again, the purpose is for future cash earnings or to sell for a profit. So just some rules to building assets. And again, we're just skimming this. We're not going to go into detail, but start early. There's no better time to start saving and investing than now. Stay invested, which means take advantage of compound interest earning interest on top of interest. And last but not least, mix it up. Don't put all of your eggs in one basket. So diversify, mix it up. These are different types of assets that you can have. We have our financial assets, real property, small business, personal property. But we want to focus when we're talking about investing is primarily on our financial assets. So that's cash, stocks, bonds, and mutual funds. And again, I'm not going to go into detail because we have other sessions that explore these topics in more detail and will be so much more exciting than we're talking about today. So how do we choose our investments? Well, eeny, meeny, miny, mo is probably not the best way to do it. We want to look at the objective we have for that asset. Why are you buying this? And we want to look at the risks involved and the time frame. Last but not least, our net worth. This is a measure of our ownership. And that's a jargon alert. Oh, it's not a fancy term. Net worth. Really, all it is what you have less what you owe. So the value of your assets less how much debt you owe. And here is just some example of different assets you may have. Again, cash, financial assets, real property, etc., and potential debts that you may have. So automobile or mortgage loans, credit cards, maybe past due taxes, and student loans. All right, so our net worth really is a barometer for our progress. It's a measure of our wealth. It can be positive or negative. And my suggestion would be to calculate it once a year. The year end is usually a good time to do that. And again, it's a measure of your progress going from year to year. All right, so these tools, what do we want to do with them? Pay ourselves first, save early, save often, and reinvest. Assess assets before buying or selling. Again, what is that objective? What is the risk? What is the time frame? And then calculate your net worth and monitor ownership. And one more plug for the upcoming sessions on saving and investing. We'll go into more strategies. We'll go into how these financial assets work and how you can make them work for you. Okay, we're coming up on the last two topics here. Protecting your potential. Just as a roof protects your house, protect your financial potential by having a cash savings for emergencies, managing risks with the right insurance, and being a smart consumer, which makes it very difficult these days with the variety of products out there, and certainly the number of scams out there. And again, I encourage you to attend the future sessions on scams that we are offering during this series. So what are the things we need to know about protecting our potential? We want to identify risks that could result in financial catastrophe, define ways to manage risk, including transferring with the right insurance, recognizing the importance of getting our final affairs in order, and identify consumer protection resources. So what is the risk in this picture? It's not good, that's for sure. So the potential risk in this picture is maybe death for that child or severe and permanent long-term injuries. So it's not good. So how do we manage those risks? We can eliminate the risk, which simply means take the skateboard away. It's pretty simple. Take that risk away. And another way to manage is to reduce the risk. So this is where your helmets come in, elbow pads, maybe start halfway down. How about pick a different hill, not so dangerous? That's reducing the risk of that injury. And then this retain your risk. What does that mean? It means you're going to take your chances. Whatever happens, happens. Oh boy, that may not be so safe. And then last but not least, transferring risk, which means somebody else is responsible for the damages. And okay, sending the little brother down the hill is not really the way to go, but what we're talking about is having insurance to pay for those financial damage, the financial costs of the damage. So in this case, it would be, life insurance or having a pretty good health insurance policy to take care of those expenses. So the first line of defense in any risk management is really having that emergency savings. Again, COVID-19 has certainly taught us how important this is. Experts say you should have 3 to 6 months worth of expenses saved up in an account that can be quickly turned into cash. So if you need to get it, you can get it. So that's liquid. Accessible, but not too accessible. So consider maybe having a savings account at another financial institution with no ATM card, and you actually have to go to the institution if you need to take the money out. Just kind of some mental gymnastics that we make sure that we keep that money there. So let's talk about the transferable losses, and this is where our insurance products come in. So we may have a loss of our income due to death, whether it's yourself or a spouse or significant other. That's covered by life insurance. Life insurance can protect that future income. And if you have an income loss due to disability, that's where disability insurance comes in. Now, loss to our health, if it's temporary, that's where our health insurance comes in. And of course, according to the Affordable Care Act, it's now required by law to have health insurance, although there is no more tax penalty if you don't have it. So I'm just going to leave it there. And then if you have a permanent loss to your health, so you can't do the basic activities of daily living, that's where long-term care insurance comes in. So this nursing home facility or skilled care would come in. And then, of course, losses to property, that's covered by property and casualty insurance, and it's based on what that product is or what that asset is. So automobile, which is required by law in the state of Pennsylvania. Homeowners, you might have some bling you want to cover. And then there's also liability if it's your fault that somebody gets hurt on your property, et cetera, et cetera. There's some other protections out there. There are credit insurance products, usually with your credit card. Some life insurance policies are connected to mortgages. I would just be cautious on that because once those products go away, the insurance goes away. Other protections, you may have identity theft protection. Read the fine print with anything that you are engaging in, and product warranties, which aren't really insurance. But again, it's a way to have some sort of protection of other assets. So it's not free. You can insure just about anything for a cost, including legs. I think it was J-Lo who did that, or somebody else insured her legs. There's some costs. So the premiums are simply the cost of coverage. Deductible means you go first, which you pay you pay money first before the insurance kicks in. Co-payments are like pay-per-view at the doctor's office. Co-insurance, you're paying your fair share. This is more common in health insurance, where you may pay 20% and the insurance company may pay 80%. Policy fees, it's just more, please. You don't get anything other than paying more. Surrender charge, this is an exit fee if you cash in a life insurance policy or annuity before the stated contract period. And then last but not least, we don't think of this very often, but this is the waiting period. So this is before the insurance kicks in. How are you going to pay for losses? How are you going to, if you, for example, if you're disabled and your insurance doesn't kick in between 3 and 6 months, what do you live on between that? So that's the waiting period that sometimes isn't quantifiable. And then getting your affairs in order. These are a few suggestions: having a medical directive. If you're incapacitated and can't make medical decisions, what do you want done with your transfer if you pass away? And then final arrangements for, celebration of life or disposal of your body. And smart shopping. Doesn't that burger look good? I don't know about you. I'm hungry. I didn't have lunch yet. But the reality is, this is what it took to make this burger: 3 pounds of ground beef, 100 buns, 2 cases of lettuce, super glue, paintbrush, glycerin and water, all to make the perfect burger. How many times they had to try to make that? Things aren't always what they seem. So always read the fine print. Shop around to at least 3 places if you're making a major purchase, and do your homework. And last but not least in this, so we're just having some information on financial services, products, and professionals. Due to time, I'm not going to go through these in too much detail, but just know that there's a difference between different financial institutions and services, what they offer, and the representatives that can help you along the way for those products. All right, so what do we want to do with all this information? We want to build a cash reserve, review and adjust insurance policy to make sure they're meeting your needs, plan and document wishes for your final affairs, and of course, ask questions, comparison shop, and protect your identity. We are moving on. The last topic: borrow to grow. Finally, only borrow to buy things or assets that will grow and feed your financial future, like seeds of a fruit tree. Borrowing in excess, just like overwatering a seedling, can slow your financial growth, weigh it down, or drown it out in full. So what is this information about borrowing that we need? Looking at the types and uses of other people's money, looking at the 4 main factors: the cost of credit, become familiar with credit reports and scores and how they are used, and recognize the credit risk to cost relationship. The more risky you are as a borrower, the more it's going to cost you. So other people's money, OPM. OPM. There are actually 2 ways to refer to OPM: credit and debt. So I use these interchangeably, but there is a difference. Credit is simply the permission to use other people's money, and debt is the other people's money that you have used and has to be repaid. So the difference between debt and credit. Now, the types of credit: there are 3 types of credit. We have revolving credit, installment, and service credit. Revolving are your credit cards. You can use the credit line, pay it back, use it again. Installment debt is once and done. So you borrow it for a purpose, for example, to purchase a car. Once you pay it off, you have to reapply for another auto loan for the next car that you buy. And then service is month to month. We often don't think about this, but our cell phone, our utilities, things like that. And here we have a list of costs and potential consequences to these 3. And again, I know that we have another session coming up on credit reports and scores, which is going to have some of this information as well. So I'll kind of go through this quickly. The types of debt: we have secured debt, which means if I don't pay the bill, you can come and take that asset away: cars or mortgages or homes. Unsecured, you're just pinky swearing, I promise to pay it back. And then last really isn't a category, but we have to define garnishments. So these are things that if you're not paying, you may have garnishments from your wages or from tax refunds, things like that. So back taxes, federally backed student loans, child support, things like that. All right, dream purchase, right? This is a lovely way to purchase a car. Let's just go through this. It's very friendly, it's very informative. We're reviewing the documentation, you're looking at the automobile, you're signing papers, and you shake hands, and then you get the keys, right? That's in a perfect world. But how many of us have experienced this guy? Which means we need to be careful about these transactions, especially, all credit transactions. So one of the key factors is don't shop for a monthly payment. And it's important because numbers can be manipulated to fit that monthly payment that you tell the dealer you're looking for. So here are some 4 factors of finance, and see how they are manipulated to meet those that monthly payment demands. So if you make a down payment, okay, the more you make a down payment, the lower the monthly payment, the lower the overall cost. If you are extending the term, so you're borrowing for a longer period of time, the payment goes down, but the cost of credit goes up because you now are financing for that longer period of time, paying interest for a longer period. Of course, if your interest rate goes up, the payment goes up and the cost goes up. And if you are making fees, that's going to jack up your payment as well as the cost. So understanding how these numbers work together, you really need to look at the total cost of credit before making that decision and not on the monthly payment. The 5 C's of credit, I know that we're running out of time here, but the 5 C's of credit, they have to make this cute and be fitted into a recipe here. So capacity just means income. Do you have the income to pay back this loan? Capital means cash. Do you have cash for a down payment? Collateral is the pledge, meaning if I don't make that loan payment, you can come and take the asset. Character is how you have made your obligations in the past or your credit history. And last but not least, conditions, which we don't have a lot of control over this. This might be economic conditions, political factions, things like that. So that's how a lender determines if you can qualify for credit. Credit reports and scores. I'm not going to go into this because we do have one session coming up that's going to go into more details. But the reports are just simply a snapshot of how you've used other people's money and paid it back. And your score is simply taking that information in your credit report and putting it into a statistical calculation, spitting out a number which says this is how likely you are to default on a loan. Okay, a couple of guidelines using other people's money. When should we use it? To invest in ourselves, to buy assets, and only use what you need. That's the key. Only use what you need. And then finally, there are some options for managing debt. I'm just going to, again, go through them kind of quickly. Things that you can research and investigate. You can do it on your own by creating that manageable money map, setting a priority towards debt repayment. You can seek out credit counseling from a nonprofit credit counseling agency. And the key here is the National Foundation for Credit Counseling. They have counselors all over the country. They do the phone counseling and virtual counseling as well. Debt management programs, which may be offered by a nonprofit credit counseling organization. Debt settlement and bankruptcy are the two cautionary ways to manage debt or to lower your debt. Debt settlement is your debt is forgiven, which that may be taxable at the end of the year. And bankruptcy will have a longer term effect on your credit history and your ability to get credit in the future. And you can see here the arrow, the cross goes up based on the options that you are choosing for your debt management programs or strategy. And one more thing, signs of predatory lending. Again, always read the fine print, understand what you're buying, comparison shop. And it's better to, if you just have a bad feeling, to walk away versus to get yourself into a situation where you're going to regret it later. And PHFA, we have a Don't Get Hooked by Predatory Lending brochure that you can actually go to our website, phfa.org, and download that for free. All right, so last about borrowing to grow. Plan and limit borrowing to a reasonable level. Borrow to buy assets that will improve your financial picture. Order and review free credit reports every 12 months. And again, our session, I believe it's next week, we'll talk all about how to get those credit reports and avoid high cost borrowing. Shop for the best loan terms. All right, so some national resources. I will, and if you're interested in getting more information on this, I know that Katrina will follow up with you, but here are some national resources for more information. And then we have some Pennsylvania resources for more information as well. So I said before about the Department of Banking and Securities, the Department of State. You can check on somebody who is has a license, for example, a beautician or hairdresser, an insurance department, the Treasury, and the Attorney General's office. And then PHFA, we do have a website, buildingyourfinancialhouse.org, in which you'll find 40 plus worksheets. If you look, actually, if you see my arrow here, we have worksheets in the More column. And you click on that, you'll have 40 worksheets that 40 plus worksheets, I should say, that deal with each one of the sections of building your financial house. Ooh, we made it. That was a lot, wasn't it? Whew. So we talked about how we learn about money, the framework for building your financial house, what we should know and do about that, with each one of those blocks and additional resources. All right, questions. Whew, I feel like I haven't stopped talking in 40 minutes. Okay, 50 minutes. Any questions out there?